Hello everyone, Angela Mills here with OTV. Today we are at the SDG&E Innovation Center, and we're here for a 1031 exchange class presented by Asset Exchange Company. There's going to be a ton of useful information, so stick around. So we are here with Lance, who's putting on this awesome event today. Can you give us a little background about what you do?
Well, I'm a 1031 exchange accommodator. It's kind of like a weird mix between tax law and real estate law. 1031 exchange is basically a tax deferral program. So whenever someone sells a piece of property, what happens is they have capital gains tax, normally if it's a property used for business or investment purposes. So a 1031 exchange allows them to defer those taxes so that they avoid paying those taxes, which can range anywhere from 25 to 33%. We do a lot of workshop. Our whole thing is we don't do much sales, but the truth is a lot of realtors and brokers need this information because they sometimes approach really sophisticated clients who say, hey, I know you can sell a house, but can you help me build wealth? Can you preserve my capital assets?
Yes.
And we just give these guys just information on how to answer tough questions from more sophisticated clients. And they come out in droves. We have about 145 RSVPs today. So
Good.
it's looking good.
I'm here to support Lance. He has been extremely educational for both my clients as well as myself as a realtor here in San Diego. He deals in 1031 exchanges. He has a background in law and he's incredibly articulate. So you can learn a lot from this guy. I invited a lot of my clients here as well as network referral partners because 1031 exchanges is a federal guideline that needs to be followed.
4 things I want you to remember, but always remember these terms. Business and investment. Defer at or above, and then remember the timeline, 45 days, 180 days, okay? And these are going to spawn over these 4 areas right here. Does the property qualify? How do you defer all of your taxes, the identification rule, and then the overall timeline?
One of the basic tenets, one of the basic principles of 1031 exchange is that you cannot be in constructive receipt of your sale proceeds. If you touch the money, it's taxable.
What was the most useful information that you learned at this class today?
Oh, I don't know. The reverse exchange is really important right now because one of my clients is about to do that.
What's the most valuable information that you learned at the class?
Well, I didn't even know what a 1031 exchange was. I had no idea what I was getting myself into. So I really learned a lot. Like what qualifies, what doesn't, and it just got me thinking of, okay, so what could I do? What could I refer some of my clients to do? So that's, it was really interesting. I enjoyed it.
Thank you so much for watching. As you can tell, this was an extremely informational class. To watch more of our segments, log on to oakwoodtv.tv.